This is an important panel. Access to capital is always the key to growth of any industry. And I thought it would be helpful to many in the audience to talk a little bit about how some investors, consultants, and a young entrepreneur feel about the opportunities in this business, and to hear about what it's like to raise money in this business. Let me make a couple of industry-wide observations, although Tony will do plenty of that. Investments in gaming companies hit a record $5.7 billion in 2018, and I know there's semantics involved, more than twice the amount of the previous record in 2017. The largest category for investors were mobile and game tech streaming, each of which took in about a third of those investment dollars. Massive multiplayer online games, eSports, augmented reality, console and PC games, virtual reality game companies also raised significant amounts of money last year. In the mergers and acquisition sector, the games acquisitions market was also on fire during 2018, with over $22 billion in-game M&A activity, making it the second highest year on record. And not surprisingly, mobile dominated acquisition activity last year as it did the year before. But the public is also becoming very relevant with respect to smaller entrepreneurs. Platforms such as Kickstarter have created global crowdfunding sources for many creative ideas, small developers, eSports ventures. This is especially important to that community who doesn't have access yet to venture funds and private equity funds. According to Statista, as of January of this year, the success rate of fully funding a project on Kickstarter was 37%, so over a third successfully met their goal. Over almost $4 billion have gone into successfully launched projects. With respect to the institutional market, when it comes to gaming companies themselves, 11 companies in this broad category were able to raise more than $100 million last year, with many other companies raising in the single to tens of millions of dollars. So it's, my impression, not being actively involved in it, is that this gaming universe is not only expanding, but there's high investment values being put increasingly on these companies and ventures. It's consolidated on the large end. The top 10 public games companies take in over 75% of public gaming revenue. So finding the right investors is, well, it's always important. But consolidating markets is great news for smaller entrepreneurs, giving them opportunities for financing, exits, which is always important to investors as well. I want to introduce our panel, who know a lot more about this than me, and they're much closer to the smaller market activity with respect to financings. Tony Farwell, on my left, is the CEO of Farwell Capital. He's a longtime friend and business partner of mine. He is one of the smartest, most creative entrepreneurial minds I've met in a 35 or 40-year career. You can look at his bio on our website and see the number of companies he's either founded, co-founded, or been a serious or key investor in. He has founded and co-founded, sometimes with me, GovX, Closing Corp, TV Data Technologies, Stats Inc., which may be a familiar name to many of you. He graduated from UCLA with a BA in economics, received his joint MBA from the London School of Economics, HED Graduate School of Management in Paris, and the NYU Stern School of Business, where he graduated first in his class. So let me welcome Tony Farwell. You can sit there.
I actually might stand up so I can see my slides. They're there. might help. If not, I will mine them or something.
They'll get them up.
Anyway, one of the slides relates to how I am defining esports. So this is not quite as broad as the full gamut of video games. So not the, including the publishers of games, game development itself, but really the streaming of games and the video competitions that are associated with that. Let's see if I can get this to work. So I am not covering poker, online poker or horse racing or really the gambling aspect. What I did want to talk about, among other things real quickly here, is what's happening in that space. So Paul just described that there was something like $5.8 billion in the broader game category that was raised last year. In the esports, the narrower space of esports, about $2.3 billion with almost a $10 billion market value in venture capital. So venture capital is really institutional money that's invested in early stage companies. As opposed to public stock markets, debt markets, banks, et cetera. The higher risk profile, more prospective payoff, but certainly a higher probability that it may not succeed. So you'll see that while the number of deals here at the bottom have moved up, they haven't moved up lockstep to the amount of money. So a lot of money going in, 1,700% growth rate over the last 5 years or 4 years. I think that's white hot. And the amount of money raised per transaction skewed by a few of them, including this one, Epic Games, which was really on its deathbed until it brought about Fortnite. And Fortnite basically took it from perhaps not surviving to a $15 billion valuation increase for that company. Fortnite, for anybody who follows the game space, has become quickly one of the more popular games. And then these investors, you may not be familiar with all the companies. Vulcan Capital is Paul Allen, rest in peace. Axiomatic is interesting. Both of those companies invested in Grant's company. Axiomatic only invests in esports, so you now have venture capital firms that are focusing their investment because they see the tremendous growth and opportunity in this space. We'll talk about some of the characteristics that heighten their interest. Well, one of them is uniquely, as far as I'm concerned, engaged audience. I mean, this audience, it really is sort of the fusion of social and sports competition, in this case online, and also has the advantage that virtual competitions take place, so that you don't always need a stadium or the physical property and coordination, the cost of putting that together. So not only is this a uniquely engaged audience, I heard a statistic, I'm not sure this is quite true, so I wouldn't repeat it, but roughly 50% of the millennial males watch 15 or more hours of esports a week. So that is a very engaged audience, certainly surpasses anything close to traditional sports. It's growing and it's very large, but it also is very fragmented in terms of typical infrastructure solutions. You know, the advertising, the management of the flow of money within the industry itself is still pretty crude, unlike other industries that are much smaller. Though that kind of sophistication is still being developed and, of course, creates all sorts of opportunities. Here, I just thought this would be helpful to try to create a sense of the segments that really comprise this industry. And again, I omit the online poker and some of the other areas. But if you look at this list, and I'll tell you the areas that I'm most intrigued with, but advertising and sponsorship is 60% to 2/3 of that. And further to what I was describing earlier, when you look at advertising on Facebook, on internet advertising, and the kind of optimization technologies, behavior analytics that are used in internet online advertising, a lot of that sophistication, the analytics, have not really wound its way entirely into esports, despite a 500 million audience, at least last year. So if you look at the money, that certainly represents a tremendous opportunity. And if you look at some of the other infrastructure, just managing the e-commerce, managing the player registration, managing all the kinds of things that have to be further developed represents an opportunity here. This slide just tells you about the revenue. I think actually the revenue in 2018 was closer to $1 billion. If you then include, which maybe overlaps a little bit in some of what Paul is discussing, downloadable content, DLC, skins, that is content that you can, as self-defined, download. That adds probably another $1 billion to that number. So you're really talking about $2 billion in revenue. If you were to compare that to, for instance, the NFL, I think it's about $4.5 billion. The NFL, of course, started at least on TV in the 60s, where Twitch, I think, really started after Justin TV in 2011. So this is still a very nascent, early industry. Audience. So about, if you add all this up for 2018, about $500 million. I think that also is understated because of the reruns or the ability on YouTube in particular to look at games that were played or highlights or anything else. I think that audience probably doubles when you add in that component. So very, very large and engaged audience. I think League of Legends had a 47 million, the championship, the viewership was about 47 million, the NBA championships was about 31 million. We'll talk about this audience. So this, I think, is a trend line that is the tectonic shift in this industry that makes it very attractive to venture capitalists. And venture capital, by the way, I would separate into two categories. One, which wasn't really represented in the first slide, and that is angel investing. Angel investing, friends and families, and then institutional side. So, it's very hard to start a company, take advantage of the Center for Entrepreneurship, Grid Lab, and the CoLab that's here to help get started. But here's the shift that you can see. If I had a pointer, I'd look at this 21 to 35 demographic where esports has eclipsed hockey and is getting closer, and baseball. So MLB sells more tickets than all other leagues combined, and actually had a downturn in attendance. So you are seeing fans aging out, and that I think that the new fans, the younger, the millennials, are going to create an enormous opportunity for investors and those looking at career opportunities for that industry. Thank you.
Good stuff. Our next guest, Tom Caprel. Do I pronounce that correctly?
Yep.
Okay. Tom founded a digital marketing company in Chicago, I believe, catering to small software and indie game developers, addressing marketing and business needs for the small entrepreneur. These services include social media, content development, business plans, media engagement, PR, and most relevant, fundraising. He has worked for at least 8 different game developers who needed help starting their company from scratch. And a lot of people who are terrifically creative people don't know how to go about raising money to start. Tom has appeared, there were 3 Kickstarter campaigns, by the way, within that number I mentioned for Tom. He's appeared at a lot of industry gatherings, including GDEX, BitBash, and IGDA, Chicago events. And I'm really delighted to have Tom here because I would suspect more people here are confronting that challenge of how do I get started than can I raise 10 million bucks at this point in my evolution. So please help me welcome Tom.
Thanks, Paul. So very much like what Paul was saying, a lot of my experience comes from engaging with smaller developers or smaller studios that are working on trying to figure out how do I make a business out of what I'm doing. And it's an incredible challenge and an incredible inspiration for me to see the ways that small developers have tried to do that and the ways that they're trying to move forward with that. Oftentimes you're seeing teams of anywhere between 3 to 15 people that are dedicating essentially several years of their life to try to take, their idea, their baby, and bring it into the world as something that people are interested in. And one of the key parts of that is always, how do you keep a business going? Because at the end of the day, what you're really doing is creating an entertainment product that's entering a already completely packed space and trying to make that available, make that present, and make that something that people want to consume. I really truly believe that games can be both products and art. I think that there's value in both. But without recognizing the importance of the product side of it, you're going to run into issues where you're not able to fund what you're looking to do. You're not able to create the business the way that you want to. You're not able to be able to reach the market like you want to. And a lot of the times when I'm doing presentations for whether it's events like this or for organizations, a lot of what I'm talking about isn't just the marketing side. It's also the business side behind that. Because really you have to have if you think of like a Maslow's hierarchy of business, the first thing before you can reach the optimization, the top of the pyramid of, we're able to sell our game and it's really successful, you have to have all of the layers below it to be there. And one of them is, good business processes. The other one is the ability to find the money you need to do that, right? It's building up to that so you can finally get to that top point of where you're able to bring that out there, good marketing, something like that. And so, a lot of the times when I've had conversations with these smaller developers, some of the things they come up with are asking questions like, how do we get money to do what we want to do? How do we do this full time? How do we become a small business that allows us to do that? And it's a real challenge because, I know that I think we've seen from your presentation, which was fantastic, by the way, that there's a lot of money moving, but it's hard for small developers to take advantage of that because there's some requirements that at least I've seen when I've talked to, and especially when I've talked to VCs about or angel developers about what they're looking for. And some of those key things involve, experience in doing something like that. So first-time developers or first-time developer teams are going to struggle to get that attention. Another one is an already existing audience that they're looking for. So oftentimes these organizations, and you can correct me if I'm wrong, but oftentimes these organizations that are getting that money do have some experience in the industry and are pulling in that money because they're able to then go forward and do that afterwards. So, if you're a first-time company, if you're a small first-time developer, you're not going to get that sort of attention because, these organizations, VCs, these angel investors are looking for opportunities where they can invest and then get that investment back and some, right? At the end of the day, it's a business transaction as well. And so you need to be able to have proof of that. And one of the funniest quotes I've heard from one of the VCs that I talked to, he's like, we look for two things. We look for gray hair and we look for, a big company. And I'm like, okay, all right, that sounds good. And really what he was saying was what I just mentioned before, which is they're looking for real, genuine experience and the ability to be able to invest in something that they know is going to have that. On top of that, there's, I think eSports is definitely a standout in games where that investment's coming in, just like Tony was talking about here, which is fantastic. But also, there are specific challenges related to development that are going to be different from that, right? There's less opportunity out there to be able to prove that you have that sort of audience. Esports has a proven audience out there with these even smaller competitions that you can get out there and go to. If you're a small development studio, it's hard to be able to prove that. Also, entertainment in general has a lot more hiccups than technology when it comes to being able to prove the the return on investment that investors are looking for. So it naturally adds another challenge to it. If you're a small entertainment studio, whether that's games, whether that's movies, whether that's film, whether that's movies and film are the same thing. Whether music, that naturally doesn't have the same sort of return as potentially some things that other technology investors are looking for, which could be something like a new biomedical device that could completely change how hearts are built, or a new drug in the way that that's being researched for a while. There's different ways that they're going to be approached, and I think that's really important to be able to understand that. So there's a lot of rabbit holes that I could go down in that, but I kind of want to talk a little bit about my experience with the smaller side, and I'm sure we'll talk more about that in a minute. So thanks.
Chris Chaney. Chris's leadership experience is underlined by a 10-year track record of success in global sports and the entertainment industry. A native of Germany, Chris is an award-winning serial founder, including being recognized by Forbes in the 30 under 30 list. He's an active eSports and entertainment advisor and investor. He is the founder and currently serves as board director for Infinite Esports and Entertainment, a leading esports media and entertainment platform. So please welcome Chris Chaney to our panel.
Thank you. Questions? Well, first off, Paul, thank you for having me. It's great to be back on campus. I was here just about 11 and a half years ago when I had actually just graduated from college and was looking at doing the sports administration program here, which is obviously one of the best in the country for those interested in the business of sports. Well, I've spent 12 and a half years now in the sports media and entertainment space. Most of that experience, or a lot of that experience, has been in what I'd describe as emerging verticals. Think mixed martial arts, which now, of course, is a multi-billion-dollar business spearheaded by the UFC. Think action sports, which, of course, is huge, and its various aspects or various different sports that make up action and extreme sports. And then, think about eSports, which is, of course, a key part of this conversation, which is a segment within gaming more broadly. And I've been fortunate enough to spend a considerable amount of time in eSports over the last 3 years or so. And even within that short period of time, it's been amazing just to see the industry transform and grow. It's happening almost daily, where this industry is changing, evolving, I'd say improving, and there's more capital, as Tony had talked about. Year over year, there's more capital flowing into the space. There are now actually a handful of venture capital firms that are specifically investing in esports, the most prominent of which is Bitcraft, which is now on track to raise a $118 or $120 million fund that's 100% dedicated to esports, and I think some gaming investments more broadly as well. But that's really a testament to where this industry, or where this sub-segment of games, of the games industry is going. And so my focus has been specifically on esports. The company that I started, Infinite Esports and Entertainment, owns a few professional esports organizations. Optic Gaming is one of them. The Houston Outlaws is another. Obey Alliance is another. So we own a collection of these professional esports organizations or teams, and compete in a variety of games, whether that's Counter-Strike, Call of Duty, League of Legends, Fortnite, of course, even though technically not really an esport. I know we could get caught up in the terminology here, but we're active in most of the big games on a global level. So for me, it's been great to build this business, to run this business, and then separately have started to work as an advisor, as Paul mentioned, with a number of startups in the space, mostly esports, some also in gaming. I'm working with a management company that represents some of the biggest gaming YouTubers, one of whom is Mr. Beast. You may have heard of him. He's the guy that gives away all the money in his videos and makes lots of money in return. He's the fastest growing YouTuber right now in the world, and should be actually hopefully the #1 YouTuber in the world by the end of this year. So I'm an advisor to his management company, and then on top of that, have also been fortunate to have made some investments in the space. And one of the slides that Tony had up was under the infrastructure section. It had talked about, I think, merchandising and apparel. Last year, I invested in a merchandising company that focuses exclusively on esports called We Are Nations. And it's essentially a Fanatics, which is a well-known name in the traditional sports space. It's essentially a version of Fanatics for esports. And you're starting to see more and more of these companies that specialize within esports on various aspects, supporting aspects of the industry, data and analytics, physical infrastructure. There's an emergence of actual spaces and venues for esports. I'm based in Dallas, and started a project which is now called the Esports Stadium Arlington. It's the largest esports venue in North America, over 100,000 square feet, seats over 2,500 people, and hosted a major Counter-Strike tournament for its grand opening in late November of last year. And you're starting to see more spaces like that either are remodeled, purpose-built, that are specifically catering towards hosting esports competitions and events. So it's really interesting to start seeing some of these companies that are working around, the esports space, because what most people know are the teams and the leagues and obviously the games, but there's really a lack of infrastructure around them, and there's starting to be some really great companies that are supporting what's happening in that wider esports world. And maybe last note, one thing, obviously being so deeply in the space, I love to see the numbers and all the growth, and it's exciting. I think at the same time, we have to start taking a bit more of a nuanced approach when we talk about esports, because we use it as this overarching term and compare it to things like the NBA and the NFL and basketball and whatnot. But it's not quite correct, because esports itself is a collection of games that are played on a professional level. So League of Legends is one of those games, and it happens to be the most popular, the biggest esport in the world. It's massive in China, massive in South Korea, but it's one of the many games which include, and I mentioned a few of them, Counter-Strike, League of Legends, Rocket League, which is soccer with cars, and PUBG, and so many different games that actually make up what we call esports. So it is an umbrella term, and so in some ways it's not fair to compare esports as an umbrella term with the NFL or with the NBA, because you're comparing apples and oranges. And also within esports, there's actually pretty distinct communities that are centered around specific games. League of Legends has a very, very passionate community of people that love the game. In some cases, they only play League of Legends. They only watch League of Legends. That's all they care about. That is their game. And the same goes for games such as Dota and Counter-Strike and others. So I think as this industry matures, we'll also start seeing more nuancing around not just using this umbrella term of esports, but starting to talk about Overwatch, League of Legends. How do those compare to basketball or to soccer? And again, a game like Rocket League, which is literally soccer with cars, how does that compare to maybe another game that's more in traditional sports, that's more kid friendly or that skews younger, right? So I'm excited when, whenever that is, in a year and a few years, when esports isn't always used as this umbrella term, but that we start talking about it from a more nuanced perspective, recognizing that there are very distinct communities within esports that are passionate about their respective games and that are different from one another.
Those are very good points. Some of them were made in an earlier panel in relation to the investment universities have to make as they begin to wrestle with this question of, are we going to build a venue? Are we going to sponsor a team? And people getting caught up in the euphoria of this big industry as opposed to, well, what does that commitment mean, on this campus, and what's the right commitment, and how should we phase it in? This is a really kind of special treat for me to have Grant Farwell on the panel. And yes, Grant is related to Tony. Grant is Tony's son, in case you're wondering about the last name. I have known Grant since he was born. And for the first 18 years or so, when I would occasionally drop in at the Farwell's house, Grant would be in front of a computer screen most of the time. At 30 years old now, he is the co-founder and chairman of a company called Matcherino based in Seattle. And I'm going to let Grant describe Matcherino to you, but it does a lot of different things, particularly around the flow of money in and around esport competitions. But Matcherino is probably the third game-related technology or web-related technology company Grant has started. When I was 30, I was barely out of school. Most relevant to this panel is the fact that Grant has raised over $6 million for Matcherino. So for those of you that are in the audience that are students or young entrepreneurs, this is a perfect example of something that you can do it. So I'm anxious to hear about that experience. I'm sure Grant wants to talk a little about Matcherino, and I'm interested to hear from Grant what was it about Matcherino that allowed him to attract capital, and what maybe did he run into that he had to adjust to? What risks did some investors worry about that he had to adjust to? So help me welcome Grant Farwell.
Thank you, Paul, for having me. Do we have the slide deck?
You have his slides.
So I'd love to talk about the investment and what we've gone through. It's been definitely a journey. Is there the remote? Yeah. But I want to just quickly go through what we do at Matcherino, and then hopefully some thoughts on the space and why it's so exciting. So let's see, how does this work? There we go. So I'm not going to talk about how big it is. I think we've discussed that a lot today. It's growing very quickly. And to get started, and everyone kind of likes to hear how it initially got started, Matcherino is kind of a prize pool management service. And the initial idea kind of came about when my co-founder was on a very popular StarCraft forum. Two players are going to play against each other. Fans came in and said, hey, I want to donate $20. Hey, I want to donate $50 or $70. And one of the admins came in and said, hey, guys, here's my PayPal email. Just PayPal me all the money. I'll make sure it goes to the winners. So we kind of looked at each other and said, hey, let's make sure that these prize pools have kind of a home, like an escrow system, make it easy to pay out, compliant, transparent. That's what we got started with. And if you don't know this space that well, as a player, which not many of us do, this is a big problem in the industry of playing in a tournament and just not getting paid out quickly or even at all sometimes. And so we have this transparent escrow system like I talked about. We've been fortunate to work with Amazon powering their tournaments, some of the Blizzard tournaments, and then one of our bigger partners, eSports Arena and EA. I'm not sure what happened there. But our goal is to make these tournament organizers more successful. So we do that with managing the money, and then we also really help connect them to sponsors and game publishers that I'll kind of get into. Kind of some recent track records. We have about 200 tournaments a month on our platform. We just broke 5,000 that have happened on our platform. We were happy to work with Ninja, with Fortnite. Everyone's heard of Fortnite recently, so we did the Ninja tournament, and that broke the viewership record on Twitch. So it had almost 700,000 concurrent people watching. So lots of people really like to watch Ninja and all the other influencers. And then we were the first third-party platform to sell in-game items from Blizzard. And I'll just quickly touch on this, but DLC is a huge part of this industry. Fans, and it's one of the ways I say it, I guess this is fairly accurate, but it's a bunch of guys kind of dressing up their virtual or digital Barbie dolls. You don't really get any in-game extra skill for doing it, and I'm guilty of it too. I've spent more money than I probably care to admit buying DLC, but that's really one of the big fuel or one of the big flywheels that's spinning that's really monetizing this space. And so what we're doing is we're selling in-game items that fans can buy, where not only do they get the DLC, but then they help support that tournament by donating directly to the prize pool that then reaches the players, and also it donates directly to we call the TO, the tournament organizer. So that way these guys that are organizing events can make money. And speaking of making money, just like in traditional sports, sponsors is a big part of this ecosystem. And so that's something that we're trying to help solve too, is some of the sponsorship problems. And these quickly are the problems. One is it's just like in traditional sports, if you make a sponsorship, you typically only see kind of brand impression and brand awareness. Someone will come to you if you sponsor a tournament and say, hey, guess what? We had 10,000 people watch. I hope you're happy. Like, I hope that moved the needle for you. So that's one of the big problems. You're really only getting brand impressions. Gamers too, they really have banner blindness, and they also we've heard that almost 90% of them use ad block. And then if you are a sponsor like Coca-Cola, you're gonna have to go out on a tournament by tournament basis, reach out to them, work out a deal, gauge its effectiveness, and then rinse and repeat. It's tough to kind of scale that. I don't know what happened to this tech, but anyway, what we're doing is we call it action-based sponsorship. So fans have to do something that a brand wants. So that could be following them on social media, downloading an app, going into an SMS program we're launching with Subway. There are these actions. If you're a brand, what is the KPI you're trying to drive? We're going to tie that to the sponsorship and make it so fans have to do what you want. In exchange, the brand will make a micro sponsorship directly into the prize pool and to the organizer. So this is an example of a Twitch extension we're working on. So you can do all these things, donate to the prize pool, and hopefully get some in-game items for doing it as well. And we're really, these fans, as you've probably seen if you've watched something, they're so passionate. And even these grassroots and amateur communities of fans sometimes are just as passionate, if not more passionate sometimes, at some of these much larger events. Speaking of Rocket League too, it's one of that's the game with cars. It's one of our most popular games. I think it's second. And then we can help connect these brands to the amateur, grassroots, and pros and all the different games. And then we give them with an analytics dashboard so you can see your effectiveness, which tournaments you sponsored, how many fans did it, where the fans are coming from. And then we help you in other ways, like traditional kind of brand awareness. These tournaments are willing to really bend over backwards, especially the smaller ones. They really don't have a lot of money, and they want sponsors. They spend most of their time, in a lot of cases, just trying to find sponsors. So we're helping them bring sponsors. And then we have a fairly good reputation in the industry, mostly because we're help solving a lot of the money problems, particularly when it comes to players. So players not getting paid, we help make sure they're paid quickly, help make sure these organizers are successful, and the game publishers are benefiting from a lot of that. So we started small. As you can imagine, a startup being like, hey, yeah, trust us with all your prize pool money it wasn't easy to get off the ground. So we just stair-stepped our way to larger and larger tournaments. I think the largest one we've done is a $200,000 Halo tournament, and hopefully some much bigger ones coming up soon. And that is Matcherino. Thank you.
So I want to start off with a question first to Grant, but I wouldn't mind the rest of the panel sort of taking the role of the investor or potential investor. So Grant, when you first, beyond your initial seed capital from whether it was family or friends, what were the things at that time that most resonated with the people that ultimately invested, and what about Matcherino did you find was a problem when you first approached the more institutional market?
Yeah, so Our first seed capital, I think and my dad was a part of this for a little bit, but we were fairly lucky. One, the quick story is we came out of Techstars, which is a pretty well-known accelerator. So that really helped give a kind of a stamp of approval for going out and talking to investors. And we raised the money before demo day. So at the end of this program, they have a big kind of show where you present to hundreds of investors, and that really helps with getting money closed because the investors want to invest in you before that happens. It's kind of this FOMO effect. So we presented as part of this program. One of the bigger VCs up in the Seattle area, they wanted all the companies to pitch them as sort of this practice, but they also get like first pick kind of thing is the deal. So we pitched to them, and one of their managing directors kind of really liked, I think, what we were doing. I think we also were just fortunate that the space itself was just blowing up. You know, the past couple of years, eSports. VCs want to have kind of a horse to bet on, so they're looking for something. And then it was a little easier than we were struggling too. We had no other commitments for our round, and then Madrona, which is the name of our lead VC, was interested in kind of talking more. So we were really excited, and I guess the interesting thing is we went to their office to talk about. We didn't know if we were going to talk about a term sheet. We knew they were interested. They said they were interested, but we didn't know much else beyond that. And we went up there, and I remember with my dad and co-founder, we were talking about like, okay, what should we ask for valuation? Because we hadn't really talked about it that much. We were thinking like $500,000 and maybe to get a $250,000 investment. And so I don't know what it was, if it was luck, timing, but we went into the meeting, and I think I'll probably never have a better meeting than this, where they said, hey guys, we think you should take $1 million, and we're gonna invest $500,000, and then Vulcan, which is Paul Allen's firm, is gonna invest $500,000. And we think the valuation should be $4 million. So we kind of were just like, okay, like yes, but we didn't want to appear too excited. It was kind of surreal. So,
by the way, rarely happens when you're raising money. Tony
yeah, I
and
don't know if
can
that'll ever
attest to
happen
that.
again. But anyway, so I guess that was my experience. But I will say it was really tough before that, and it has been tough beyond that too. As hot as esports is, there are so many different companies going and pitching what sounds very similar opportunities and platforms that it's really hard to differentiate yourself, because a lot of the investment guys that hear about this space are obviously very smart, but it's tough to really see the difference, I guess, sometimes, as weird as that sounds. So it's been tough to fundraise, but we've gotten through it. We just closed about $3 million, hopefully more, next week, but we are able to keep the lights on, which is what's important.
Yeah. I didn't realize we've still got 5 or 10 minutes. Is there anybody in the audience that would like to ask a question of any of the panelists? Well, Bethany, you're not asking. Nobody? Okay, Adam, you want to come up to this mic? Or, oh, she took it.
Oh, sorry. My question is, dollar for dollar, what have your experiences been with seeing people investing in different types of games, from first-person, single-player like Mass Effect and games like that, into full-on MMORPGs? What have people been hesitant to invest in, and what investments have you seen paying off the most? And the timelines for what people expect to see money back.
I wish I had, you may have the answer to that. I will say that the complexity of investing in game development is that the MVP, most valuable product, has to be the product done. I mean, really, it's like a movie. You can't look at half the movie and determine whether it's going to be a good movie. So venture capitalists are a little shy, not entirely, in game development, in that the MVP is the product. And sometimes there are better engines now, so you can develop off these engines, that shortens the development cycle. So you really have to, I think, having not invested in that space myself, I think you're going to have to demonstrate some expertise. Obviously, a storyline that someone finds compelling, but executing on all that, you just don't know if it'll be a success until the other end of it. There are very few games that make money. So you're also going into that headwind. There are lots that people play. They may not make a lot of money, but whether you're Candy Crush or EA, Activision have a few franchises that do extraordinarily well, but it's very tough, and you can't start small.
Adam, did you have a question?
So I really quickly wanted to comment on their question as well. I think, like Tony was saying, it's kind of crazy how much games actually cost to make. So I'm sure you all are familiar with Shovel Knight. One of the most recent, not Hollow Knight, but Shovel Knight. One of the most recent Hollow Knight expansions took $1.2 million and they still lost money. So it's really kind of difficult to be able to break down by the type of game, because I don't even think in the conversations that I've had with investors that's come up. Really, it's more about what is your opportunity as an organization. Again, it's an entertainment product. What is your opportunity as an entertainment product to be able to be invested in and then be able to recoup that money later on down the line? And like I was talking about earlier, entertainment products in particular have a special problem associated with that because especially in games, it's moving so quickly. If you have a 3-year development cycle and you were working on games 3 years ago, you probably would have started a MOBA. If you would have started it, but now that wouldn't be as relevant. If you started it now and you started, 3 years from now your game comes out, you'd probably start a battle royale. But realistically, 3 years from now, you have no idea what the next hot thing is going to be. That's another difficulty associated with that because it's moving so quickly.
I know.
My question dovetails with that one, then, with how much esports is getting attention and how much it's attracting venture capital. What are the reasons, what are the fears that still keeps venture capital at bay? What are the things that people worry about when they're looking into making investments, whether it's in a specific game or whether it's the infrastructure that surrounds esports? What's still keeping people out?
I'd say lack of understanding is still a really big hurdle. Most traditional VCs, unless you already have exposure in your portfolio tangentially to gaming and esports, you probably don't know and might just not understand the industry. You're still scratching your head around, a bunch of kids, other kids play video games and there's money in that. It seems bizarre, but it's not. When you break it down and you start to understand, it's not at all. It's just like traditional sports conceptually, right? That concept of it's competition at all levels, and the appreciation for competition and being the best and whatnot, and witnessing others do things that you can't do yourself. So I think one is simply understanding. Two, and you mentioned it, and that's just the games themselves, and Tom just talked about it, and that's the cyclical nature of games, from MOBAs to battle royales, which really wasn't a genre a few years ago. It just didn't exist, battle royale games. So as a venture capital investor, if you're looking at a gaming company, and Tony mentioned it as well, it's really hard to make money. Very few do, and then if you look at a little deeper and you see this really great BR game that's being developed, well, is that relevant in 2 years from a consumer perspective? So you don't know. So that's the gaming side. And then esports, again, that lack of understanding. And then I think the industry is also moving really, really fast, that it's tough to capture it. If you take a snapshot today, that snapshot is outdated a week from now, 3 months from now. You might look at a completely different landscape, and so you still need to get comfortable with the space you're learning, but at the same time, it's essentially passing you by because you're not able to catch up to it. So it takes a pretty high level of getting comfortable with risk and also not knowing where the space is going. Monetization, if you look at the team side, is still a question mark. How do teams actually make money besides sponsorships and advertisement dollars? So there's this uncertainty and this breakneck speed with which esports in particular is evolving, that it's really hard to place bets in the space unless you're saying, I'm all in. I just believe in the space. I don't know where it's going because no one does, but I believe in it and I'm all in. And not everyone can get comfortable with that.
Hi. I have a question. Hi. So I don't, and also I kind of walked in late. My apologies if you probably touched on this or anything at all. So has there been a movement, or is there going to be a movement of VCs investing in companies and studios on the East Coast more than the West Coast? Is that ever going to be possible? Do you believe that there's going to be a changeover in saying we're going to come to this other side of the country and see what they got going on, and see possibly if we want to invest in their businesses and to build them up just as we did on the West Side?
Well, maybe I shouldn't start because I'm not sure I have the answer to that other than an observation, and that is that when you look at investment geographically, of course, a lot of investment takes place in Silicon Valley, not necessarily esports, but a lot. And venture capitalists tend to like, even though they might say otherwise, to be relatively near the portfolio company. So, and you have a lot of, LA, West Coast, Silicon Valley. So I would say you'd like to think there's a meritocracy there, that, great developers are on the East Coast. Why wouldn't you invest there? With no firsthand experience on that, I would say they tend to be provincial, which is unfair, because why would you be? Doesn't mean it can't be done. Investments are made here, in Ohio and all over. In the game development space, I can't say that wouldn't happen. A lot's done in, was it EA or Active? It was EA who acquired a company in Scandinavia. It was a principal player in their development. So not impossible, but you're going against a little bit of a headwind there.
But there is, right here, tech growth looks for young entrepreneurs with a technology-related bent, and they stretch that definition. It's obviously easier if you're out on the West Coast, but that is starting to change. There will be centers, whether it's Boston, Columbus. If you have a good enough idea and you're an impressive enough team, I've always been convinced you can raise money, no matter where you are. So don't be discouraged about the fact that all you hear about a lot of times is the West Coast, Seattle, or San Francisco. There are plenty of very solid investors here that would love to invest in the right team and the right product. I truly believe that.
And I think the team part of that is, and this goes to the earlier question, is what fears are VCs saddled with. And so in a lot of other industries, pharmaceutical, biotech, others, there are people that are on their third company, second company. Well, this is such a young industry. People aren't necessarily on their second or third company. And even though venture capitalists are inherently comfortable with taking risks with sort of new talent, if you have a team that can demonstrate, that has a creative bent or has any sort of experience in that, I would agree wholly with what Paul's describing. But I think, movie production, a lot of that tends to be a tighter circle, and game might be the same.
One maybe encouraging stat could be that the highest concentration of eSports, so not specifically games, eSports investors is in New York and in California. And perhaps through that, you'll see more activity of investors on the East Coast also getting into the games themselves, the publishers and developers, the game companies. So certainly in esports, there's a lot of activity in New York and, and surrounding area. And obviously a tremendous amount in LA, but perhaps what's happening on the East Coast around esports could then also move into gaming more broadly from an investment perspective.
Last thing, because we are out of time, but there is a very well-known venture firm in Washington called Revolution Ventures, run by Steve Case, who started America Online, that is specifically looking for investments outside of Silicon Valley and New York. They really believe in what he calls the rise of the rest, knowing that there are terrific entrepreneurs and terrific ideas in other places. And if you're really just starting, Tony and I have been lucky enough to have angel investors, in effect, start companies and stay with us for quite a while. And there are angels all over, including Athens, believe it or not. So I think it's more a question of selling yourself, selling your idea, getting started. I have always found that a lot of private equity firms and venture firms are like lemmings. If you have a modicum of success and some proven track record, they'll all line up at some point. So the real difficult is find that local family or friend, or find an angel investor in your neighborhood that can risk some capital at a very early stage and get going, build a little value, show a little bit of a track record, and then visit these more institutional groups.